Welcome back to Big Picture Investing. I'm Kevin McCormick, and today we're going to take a look at why we're coming up on the best time of year to buy Microsoft as a long-term investment, or even better, a short-term trade for the fourth quarter. With that said, let's take a look at the data that backs up that statement. If we look at the return of Microsoft over the last 10 years, it has been an outperformer 7 out of 10 of those years with an average return of 9.54%. This is an enormous outperformance compared to the S&P 500 over the same period. How I calculated this data is using the closing prices of the stock on September 30th and the last trading day of December. You'll find different closing prices depending on your data sources, so I adjusted properly to try to get the most accurate data possible for all of you. This is a look of the individual return over the last 10 years for Microsoft. The best return was 2015 with a return of almost 25.5%, and the worst return was 2018. But this highlights why we need to put in perspective of the comparison to the S&P 500. Because 2018, the fourth quarter, was a big down quarter for the S&P 500 and the stock market in general. So that's why we need to compare our performance on this opportunity of buying Microsoft to the S&P 500. And here's analysis of that head-to-head performance right here. And you can see that big decline that we had in 2018 is very clear on the stock chart, on this chart here. So the most important part to understand is it does highlight that Microsoft outperforms the market over the next 90 days compared to the S&P 500. If we look at this head-to-head track record, it is clear as it can be. 70% win rate over the S&P 500. 7 out of the last 10 years, it has been a better performer than the S&P 500. So let's take a quick look at this risk return profile. We're looking at an average return, as we said, 9.54%, but we are going to have higher volatility as we would expect. We would expect individual stocks to be more volatile than the stock market itself. Best year, as we already highlighted, was 2015, and the worst year was 2018. So the important thing to understand here is if you expect the stock market to continue to move higher in the fourth quarter through the end of the year, then buying Microsoft is a great opportunity to outperform the market. But with that said, let's take a deeper dive into this setup, looking at the current charts and a few of these historical examples to see if we see anything in common with our current setup in Microsoft. I'm going to start off by taking a look at the current setup in Microsoft. If you're new to my channel, I'm a big fan of the DeMark indicators that signal buying exhaustion and selling. That's what the 13 and the 9s are in the chart. Currently, we don't have anything exciting going on with Microsoft at first look. But the important thing to keep in mind here is this was our earnings pop and then pullback that occurred earlier this year. And we've now been in basically a consolidation period that dates back before the earnings pop that we had, all the way back to early July. This is actually a good sign for this trade and aligns with a very important historical pattern for some of the best years for this trade. I'm next going to take a look at 2021 and 2023 chart setups compared to our current chart setup, because both of those years were over 19% returns. So if you see here on this chart, this is 2021. And the blue line is the earnings release that occurred that year. This was actually an earnings beat in 2021, but you can see that the stock sold off. We beat this year, and the stock went up, but then sold off and consolidated. Almost identical area of consolidation that occurred in 2021. The stock just traded sideways for 3 months. But this one is even more impressive in my opinion. If we line this up correctly, you'll see here that same thing again. Earnings pop, and then sell off just like we had. But what's really crazy about 2023 is the chart looks very similar. If you were to put these over top of each other, including this gap that occurred in April, really uncanny how similar our current setup in 2025 is to the 2023 setup that returned 19% from September 30th till the end of the year. So if you're interested in the technicals here, you can see that we are in area consolidation, which usually leads to a breakout higher, which means that we should get an over 10% return this year. If we take a look here, back above this high that we set on earnings. So that is actually our target, and it wouldn't be unreasonable at all to have a 10% return. The other part that's interesting about this, if we'll go back to the slides earlier, and I'm going to end with this for everybody, this Q4 performance year by year has this very strange pattern of a high year and low year, high year, low year, high year, low year. And then if you look at 2021, 2023, now here in 2025, if the pattern continues, we should be expecting a above average return in Microsoft this year. I'd be happy with just a 10% return over the next 90 days, but this is setting up from a technical perspective, historical seasonal basis. The stars appear to be aligning, folks. I think it's a great opportunity to buy Microsoft for the long term. And if you're a trader out there, it's a great opportunity to look for buy signals and setups in Microsoft, because we should see some volatility that will give you great trading opportunities over the next 90 days. If you like this content, please don't forget to like and subscribe, and good luck with your trading.